watching Traders Morning Setups with Dex the Algo Capitalist. Dex created his pulse wave price trigger reports over 2 decades ago, and he's been using them to ride the pulse waves as a full-time trader ever since. Find out more about Dex's reports and sign up for our next webinar to learn how to use them at pulsewavetrading.com.
Good morning. Good morning. It's another day, but it's a special day. It's Fed Day. You're listening to Dex the Algo Capitalist, aka the Vulcan, coming to you live from pulsewavetrading.com, home of the world famous Pulse Wave Price Trigger Reports. Sorry I missed you guys yesterday. I had oral surgery, so please excuse me if I sound a lot different or slur my words or whatever. It is a little bit difficult to talk without some discomfort. So I apologize ahead of time. Let's jump right into these overnight markets. US dollar index is down 18 pips at 103.21, still managing to cling above the 103 handle. The euro is up 19 pips at 108.86. We have the pound sterling up 20 pips at 127.20. We have the Aussie up 2 pips at 66.16. It's been maintaining around this price level for a while. In Bitcoin futures, they're off $870, trading at 43,020. Ethereum futures down $75, trading at 23.16 and a half. We have crude oil futures down 47 cents this morning, trading at $77.34 per barrel. We have nat gas up 3 cents at $2.11. Gold futures up $11.50 per ounce, trading at $2,062.50 per ounce. Silver is up a nickel, trading at $23.27 per ounce. Copper up about 2 pennies, trading at $3.93. Finally getting a little bit of uplift here. Looking at the Dow futures, up 68 points at 38,680. And it has a bullish 2-bar Charlie setup this morning, which means we can expect an all-day up day and for the market to finish in the green. Now, today's a caveat, though, because it's a Fed day. And yes, he is doing a press conference at 2:30. And he give the announcement at 2 p.m. This is all Eastern Standard Time. So that could change everything because we don't know what they're going to say. And at the end of the day, you really don't know what they're going to do. And even if you did know what they were going to say or what they were going to do, you don't know the market's reaction to whatever they say or do or don't say or don't do. E-mini S&P 500 down 25.25 points at 49.25. All right, and we have the E-mini Nasdaq 100 down 203 points, trading at 17,388. And it finally got into the 17.3 handle. The Russell, not far behind, down 12.5, trading at 1993.70, right off of a new overnight low here, taking out the overnight low of 1991.5. And soybeans down 6 cents this morning, trading at $12.13 a bushel. Corn is down 2 cents a bushel, trading at $4.44 a bushel. And wheat down the most, down 7 cents, trading at $5.98 per bushel. Wheat is really struggling with the $6 handle. Just can't seem to stay above that $6 handle. So we'll see if that changes in the near future. All right, so here's what is going on today for those that are unaware. We have the Fed that's coming out at 2 p.m. Eastern Standard Time. And then we have the speech conference, whatever you want to call it, at 2:30. All right. In tech news, tech CEOs will testify before Congress today for a hearing on child safety. And in business news, it's the most wonderful time of the year at Chipotle, burrito season. But first, the cost of cuts. There's been plenty of speculation about what Google's mass layoffs last year meant for its famous culture. But what about the impact on its bottom line? The 2023 job cuts, which totaled some 12,000 in January alone and left employees shocked, cost Google $2.1 billion. Alphabet shared the number as part of its fourth quarter earnings report on Tuesday. The cutting costs don't stop there, however. The tech giant also reported it expected to incur an additional $700 million in severance costs this quarter. Google already laid off hundreds of employees this month, impacting everything from advertising to central engineering. And CEO Sundar Pichai reported today that there will be more of these layoffs to come. This year's layoffs have led some Googlers to start fighting back amid what they believe is a destruction of the company's culture. Paying nearly $3 billion to lay off employees wasn't the only sore spot on Google's earnings report. The company's revenue for its search business, its bread and butter, fell just short of Wall Street estimates. Google's revenue for the quarter, $86.3 billion, and fiscal year $307.4 billion, showed year over year growth about 13% and 9% respectively, and top analyst estimates. But that wasn't enough to soften the blow of Google's core business not meeting expectations, and its share price dropped during after hours trading. Adding salt to Google's wound was Microsoft's success last quarter due to its AI products. The fellow tech giant posted $62 billion in revenue, an 18% increase. The growth was largely thanks to its big bets in AI payoff. Now, remind you, I did show you the chart on Monday, and I told you that Google's chart was a little concerning because we had a bearish trend momentum reading. So when the market sold off after hours, when the stock sold off, we were not surprised. The earnings result validated the company's strategy to move quicker than some of its peers during the early stage of the AI race. Meanwhile, rivals like Amazon and Google have scrambled to respond. Never one to be satisfied, shares of Microsoft dropped a bit in after hours trading as investors were looking for even more AI fueled growth. And that's according to Bloomberg. Still, Microsoft's big revenue growth shows the tech giant is on the right track as it looks to cement itself as the go to destination for companies looking to leverage AI. A crash course in analyzing the Fed's policy meeting. The central bank will hold its first meeting of the year, and Fed Chair Jerome Powell's press conference could offer some important clues on where things are headed. Former Fed economist Claudia Salm said, in short, it's not so much what Powell says as much as how he says it. And you've heard me tell you that here on YouTube for years. Fed speak is very important. There are software programs that were designed and built to literally analyze every word that the Fed says. It's hilarious when you think about it. So today I'm going to invest like it's 1999. The booming stock market is looking awfully similar to the one that preceded the dot-com crash of the early 2000s, according to JP Morgan, from market composition to valuations. Now, I've been saying that too, except for I'm saying it's, to me, looking more like closer to 2007 than 1999. If you recall, in 2007, leading up to the debacle in 2008, the NASDAQ 100 was not participating in the new all-time highs like its peers, like the Russell, the S&P, and the Dow. And that was, to me, a telltale sign. And then we know the rest is history. China's economy is an absolute mess. The collapse of real estate giant Evergrande is the latest blow to the country, which is also fighting deflation. A lack of foreign investment and a stock market slump aren't helping matters. The U.S. is really in no better shape. Congress is set to grill some of the biggest names in tech today. Leaders from Meta, X, TikTok, and other tech companies will face questions over their platform's efforts to protect children from S exploitation online. This will be ex CEO Linda Yacarnio's first time testifying before lawmakers. A judge struck down Elon Musk's $55 billion Tesla pay package. The judge sided with a shareholder who argued in a lawsuit that the Tesla CEO's massive pay plan was beyond the bounds of reasonable judgment. See, folks, that's one of the problems of going public. When you go public, you lose control of your company. The government and the shareholders are really technically the CEO of the company, okay? You aren't. All right. You don't own nothing. So then why would people give up control of their company to go public? Because they can become instant billionaires. A lot of people want the instant $1 billion payoff. So they'll become instant billionaires. They don't care if they have any future dealings with the company or not. Some just walk away altogether, basically. They don't care. And not thinking about legacy, not thinking about, you know, how the company is going to be ran and decisions that are going to be made are going to be totally out of your control. They let the $1 billion in their bank account speak for them. But it's not always a good idea to sell. Instant gratification, instant money is not always good money. And Elon Musk is realizing that he's made a deal with the devil, and now he's pretty much lost control of his company. He cannot do whatever he wants to do. There are limitations. But if it was a private company, then he could do whatever he wanted to do. Not so once you have a publicly traded company. Jack Dorsey's Block is the latest tech firm to lay off staffers. Dorsey told employees on Tuesday the fintech would be laying off a large number of staffers. A person familiar with the company stated that it was more likely closer to 1,000 people who are about to be laid off. In business news, a WTF is burrito season. Chipotle has pointed to the months between March and May, aka burrito season, as a time when business booms for the fast casual Mexican chain. It's even planning to hire thousands of people to help staff the surge in sales, leaving some to wonder, is that really a thing? The economy is roaring, so why do we keep hearing about layoffs? January marked the month of layoffs for employees at companies like the Los Angeles Times, UPS, and Microsoft, to name a few. But data from the Bureau of Labor Statistics show that the nation's layoffs and discharges rate has been steadily low, hovering about 1%. Keep in mind, though, that this was the Fed's mandate, was to get the unemployment number up. They told you in order to, quote unquote, fix the economy and the hyperinflation and all that other stuff, that they were going to need to see massive layoffs. And that's exactly what you see. Now, instead of just doing it all at once, I'm sure they worked out deals behind closed doors with companies to do this incrementally. Okay, Amazon, you go in November. Okay, Microsoft, you can go in December. Okay, but ABC company, we need you to wait until March. Okay, can you do that for us? Okay, and then and down the line, that's how it works. Amazon Prime membership is bouncing back in the US while there appears to be more chatter about people canceling their Prime subscriptions. New data suggests that membership growth may have actually increased after a dip in 2022. In other news, PayPal lays off 2,500 workers 1 week after CEO announces new chapter. The first full reviews are in for Apple's Vision Pro. Here's what people are saying. You can Google that. UPS is cutting 12,000 jobs as CEO cites soft demand and higher labor costs following historic contract deal. Boeing 737 MAX 9 jet is flying again. Ken Griffin says Harvard is producing whiny snowflakes and he's done donating to it. Russia accidentally bombed itself again, the fourth time this month, according to UK Intel. China just revealed plans to take on Elon Musk's Neuralink. And Meta used copyright to protect its AI model, but argues against the law for everyone else. Isn't that what big business does? Once they've succeeded and has met all of their marks that they want for themselves, they lobby to have the laws changed to make it difficult, if not impossible, for anyone else to come and compete with them in their space. The guilds do it too. You'll have like the top 3 companies or the top 5 companies in a sector lobby and pass things that you'll be like, hey, isn't that going to hurt them? No, it's not laws to hurt them. It's laws to hurt you if you think you're going to just open up and come and compete against them. So it's de facto monopoly. They're using the government as their attack dog to keep outsiders out. What's happening today? Today's earnings, Boeing and MasterCard, among others. The Federal Open Market Committee is set to make a decision on interest rates. And that is our morning program. I thank you for your patience in tuning in. We do have some wonderful things on tap for you coming shortly. I'm not at liberty to speak on them as of yet, but trust when I say you will be pleasantly surprised. All right. So with that being said, the system works if you work the system. Bulls make money, bears make money, and pigs get slaughtered. So remember to take what you can and give nothing back. And with that being said, smash the like button, subscribe, and share. And I'm out. Peace.